Okay, we move to the last topic, which is implications of Emh. As we said before, the semi-strong form prevails. It means in a lot of the markets, the semi-strong form is the efficient market, the forms of the efficiency to be prevailed. And if the details of a proposed new investment projects are released to the public, so in the first one, we talk about some new information to be released to the public, how the share price movements will be. Okay, it should be rise by the amount of the project NPV when the details are announced. So for the Emh, for the efficient market hypothesis, when the semi-strong form prevails, means that here is timeline. The information released or announced at this day, we call it day 0 or day 0. Okay, day 0, let's say. And if I draw a share price on top of it, maybe here, if the announcement of the investment released to the market, here, the share price will suddenly go up. If, for example, here, the NPV project is acceptable by the market, which is welcomed by the investors, will suddenly go up and then keeping at a more or less same level. Okay, here is the share price performance if it is a semi-strong form. And keep in mind that the important notes here is the reaction, the market price react to the information is so fast and quick. There's no waiting time. Just react. The market just react to the announcement. It suddenly increased. The share price suddenly go up, and then maybe keep more or less level or stable afterwards. And new good information announced will rise share prices, and new bad information will cause share price fall. So in the same logic, if there is a bad news announced in day 0, the price suddenly drop and then keep flat. So here is the semi-strong form characteristics. So the share price react quickly to the information released. All right, here is the key points I would like to highlight. The third point, yes, just echo what I said. The announcement of financial results will cause the share price to move. In a takeover situation, a firm cash offer is made for the shares of a company. The share price should immediately move to its cash price. So we talked this topic before when we discussed about the business valuation, and for the timeline here is the same. At the announcement day here, the share price will immediately, for example, before the announcement in here, suddenly it will go up to the share price, maybe, for example, here. So the point we'd like to highlight is for semi-strong form is quickly reflect the information will quickly reflect in the share price. And no one knows what the information will be released. So for the EMH holds, share price movement is following a random walk. Because you don't know, for example, if it is a fair play, you don't know what the information will be available tomorrow for company A. Maybe it's good news or bad news. If it is good news, then the share price just go up, and if it is bad news, just go down. Okay, you cannot make, you cannot, for example, you cannot trade, or you cannot do a buy and sell activities by studying of the past share prices trend and follow certain patterns which are repeatable. Okay, because technical analysis saying that you can study the share prices trend and follow certain patterns which are repeatable. So in any forms, it is not work for technical analysis if EMH holds. And for fundamental analysis, it derives value for the business shares by using some common models. Okay, at the same logic, if EMH holds, fundamental analysts cannot do on each form, no matter it's strong form or weak form. Okay, because the share price movement just follow the random walk. Okay, but be careful that in examination, sometimes they use strong form, semi-strong form, and weak form. They sometimes add one more, is if the market is not efficient. Okay, it's different. It's different. For the EMH holds, okay, it can be strong form, it can be semi-strong form, it can be weak form. But if EMH doesn't hold, it means the market is not efficient. If not efficient, then it means that for technical analysis and fundamental analysis is possible because the information is not fully reflected in the share price movement. Okay, as said, if EMH holds, then the share price movement is so quick because the share price just reflects all the information available to the market, to the investors, and all the investors can just go to the market and buy or sell and sell to move the share price at the one time to another level. If the market is efficient, but if it's not efficient, then it's another story. Okay, so be careful of the questions and answers provided in examination. Okay, because if it is saying weak form, it doesn't mean the market is. It doesn't mean the EMH doesn't hold. It's only a weak form. All right. So here is about the general principle of EMH, is that publicly available information is very swiftly and logically analyzed by many investors as soon as it becomes available. And these investors quickly make buy or sell decisions accordingly. As a result, the new information will quickly cause the price to rise or fall. Okay, so just repeat some keywords: quick, or quickly reflect, or information. Okay, especially for strong form and semi-strong form. For weak form, share price, current share price, reflect plus information. Okay. So next, consequently, the market prices of stock and shares very quickly and accurately reflect all relevant information which affects their value. All right. Conclusion is you cannot guarantee to make consistent gains by analyzing publicly available information. So it's the conclusion. And to achieve strong form, what do we need to do? Okay, for example, if you are asking questions, asking you how to, for example, how to achieve a strong form EMH, the following may help. For example, advancement and investment in the information technology, so that everyone can access the information very quick to achieve the closest status of the strong form EMH, and more detailed and advanced accounting standards, maybe, and company acts describing the minimum and more detailed disclosure requirements in published financial statements. Okay, so disclosure requirements is another key to achieve strong form EMH, and the implementation of corporate governance. Okay, the keywords is corporate governance, and 4, globalization. Okay, it's about the information, because when we talk about EMH, it's about the information, the release of information, and the how quickly the share price will reflect the information released in the market. So summary, the lecture today, we talked about the business valuation. And for the business valuation, we talk about equity valuation. Okay, for equity valuation, we remember there are 3 major types. First is income based, which is the PE multiple or PE ratio. The second one is asset based. The net asset value. And the third one is the cash flow based. Example is the discount cash flow model, or the NPV, and the dividend growth model, or dividend valuation model. So it's about the equity valuation, we talk about it. And then we talk about the debt valuation model, including the irredeemable, irredeemable debt, the redeemable debt, and the convertible debt. Okay, we showed you how to get the numbers from different different types of debts. Okay, for example, irredeemable debt versus redeemable debt, also for the convertible debt. And for the convertible debt, okay, we the maximize of the debt value or the debt itself, and also with the conversion rights. Okay, so the maximum value, either from debt itself or including the conversion value, the conversion rights. So we share with you that valuation, and then we talk about the EMH. Okay, the EMH. We talk about why we need the EMH, because the investors are looking for the looking for the returns, the share price return, including the dividend return, and also the return from the capital gains. And from the capital gains, it means we need to have the share price move. And EMH is try to explain how the share price moved with the information released. So we have different types of EMH. We have operational efficiency, we have the allocation, pricing efficiency, and also we have the allocational efficiency. We have three types of EMH. We have three forms of EMH: strong form, semi-strong form, and weak form. And also we share with you, other than EMH, we share with you two types of analysis: the technical analysis and also the fundamental analysis. Okay, how these analysis explain the share price movement, what's their beliefs, okay, how the share price move based on their belief. And here, okay, we finished the discussion about the business valuation and also the EMH. And these topics will be exist in examination in section A, the objective test question, and also part in the section B as well. So study it and prepare for the questions in these two sections. Thank you.